All right, hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic as always. In today's video, what we're going to be doing is I'm going to be going over FBY and my thoughts on the YieldMax Meta Option Income Strategy ETF. So in this video, what we're going to do is FBY, or the Meta Option Income Strategy ETF, doesn't currently pay a dividend yield, so I can't really go over their dividend. But what I'm going to do is I'm going to tell you a little bit about FBY and Meta in general. We're going to talk about their business model, and what I'm going to do is I'm also going to go over the financials, being the income, balance sheet, and statement of cash flow, so that we could really understand Meta and get a good sense of FBY and where I do think it's going to be headed for the future. And so if that all sounds good, please do make sure to hit that subscribe button. We're up to 1,727 subscribers, so please do subscribe if you haven't yet done so. We're a growing page on YouTube. Our videos are doing pretty well, even though this last one got 9 out of 10 in our recent video, still getting over 800 views, which is fantastic, a lot of comments and a lot of likes. So thank you to everyone who's doing that. So today we're going to be talking about FBY. So FBY is the YieldMax Meta Option Income Strategy ETF. It's an actively managed fund. As I go over in all my YieldMax videos, they generate monthly income by writing/selling call options on an underlying stock, and this one being Meta or Facebook. And so YieldMax, just kind of diving into them, what they do is they write synthetic covered call options. They don't write call options. They don't own any stock. They don't own any Meta or Facebook. And what they do is they simply look to replicate the ownership of Meta through buying shorts and long call options to basically track the price action of Meta. So they don't own any stock. What they do is they do it inverse. So they go -1 and they go a +1 on the long side, and then they collect income on that negative side. And as you can see, the fund's primary objective is to seek current income, so income in your pocket right now, and the fund's secondary investment objective is to seek exposure to the share price of the common stock of Meta platforms, for example being Facebook, subject to potential investment gain limit on potential investment gains, that being they're capped at about 5 to 15%. I'm pretty sure someone said this before, it was weekly, not monthly, but they are capped just due to the fact that they do write those covered calls. Now, diving into the stocks, as you can see, Meta has actually been on a pretty good run lately. For the past year, it's gone up almost 300%, which is pretty fantastic. And Meta is a really diverse business model. As most of you probably know, this is Facebook turned Meta. So Facebook, or Meta Technologies, has a lot of different platforms underneath it, being Facebook, Instagram, Messenger, WhatsApp. They are an audience network, and they have a bunch of other different little things that they do. As you can tell, they're in a lot of different industries, being automotive, consumer packaged goods, e-commerce, education, gaming. So they really touch on a lot of aspects, and they are a networking platform. If you're, for example, looking for a job, they can help you out with that. They have a lot of amazing apps such as Instagram and Facebook, but they do a lot of advertising through those different platforms. And there's a lot of different things that you could use, such as Facebook Marketplace, where people go and they buy and sell things. You guys know all about that. You guys probably know all about Facebook more than I do. But the thing is, they're just a massive ad. They just collect a lot of money from ads, and they just provide so many different opportunities to create revenue in the online space. And that's really what Meta does. And even I think they're coming out with some kind of virtual world, which I honestly am not a huge fan of, to be honest. I like the real world, not the virtual world, not the meta world, but that's what they're trying to do. So today, why don't we digest their financials? So they are a $800 billion market cap company. Their current earnings per share are about 7.1, and they don't pay any dividend. And this is great for the FBY holders because they're going to receive a dividend for but following the price action of Meta, if you do think it's going to go up and beyond in the future. So now, diving into their financials, what we want to see is every year they're growing, which they pretty much do. You got to keep in mind, with COVID, 2021 is probably going to be their bang out year, their best year, just due to the fact that everything was switched to online, and so they were really generating that income. But as you can see, they're still making $23 billion every single year off a total revenue of $116 billion, which is pretty good. Their total assets, going down here, are $185 billion. This is probably not including, obviously, like, sure, obviously it includes Facebook and Instagram, but those are just online platforms. But as you can tell, their total assets compared to their total liabilities is fantastic in my opinion. We're looking at 185 billion compared to 60 million, which is, you know, I like to see basically the total liabilities half of the total assets, and that's exactly what we have here and more. And as you can see, their total assets absolutely growing every single year, which is fantastic, and their liabilities are growing too, but that's okay. Now jumping into their statement of cash flow. What I want to see here is you want to see everything trending upwards. So as you can tell, they did have that year in 2021, which was great, but for the most part, they are trending in an upwards position for their net cash flow for operations, meaning just even having the company operating, they are increasing their revenue, which is great. They're actively reinvesting about heavy amounts, as you can see, about $28 billion in the past year that they've reinvested, and their free cash flow is actually really good as well, coming in at about 20 billion. They could definitely pay a dividend, but I think they choose to just reinvest as they are in the tech space. In tech, everything is constantly moving, everything is very quick, and so they probably don't want to pay that dividend and just want to reinvest into new ventures. Now looking at the cash at the end of their period, see, it was about $16 billion, down from basically $18 billion in the last year. So absolutely have a lot of space. They are a pretty stable, pretty safe company in my opinion. Sure, they did have this massive downtrend here in 2021 from $379 all the way down to literally $93. That was a massive downgrade, and I'm pretty sure their market cap dropped to about $250 billion. So if you picked it up there, you're definitely doing well. But now we got to talk about the future of Meta and the future of FBY, because FBY is a recently announced fund, only coming out literally like last week. And as you could tell, just going over the past month, so FBY was released July 28th, and on July 28th was after this whole kind of jump up in Meta. So from this point here, we're following this price action, and as you can see, FBY has pretty much done the same, and that's what it looks to do. It looks to match the price action of Meta. So what do I see for FBY? Well, looking at the past year of Meta, you can see it's been on a pretty good uptrend. Like over the past 5 years, it looks like it could reach this point here, which is up to $379, currently at $310. So it still has about $60 more or so to run. So that's a pretty good sign. I do think in the future, though, that Meta platforms will obviously be bigger than it is today, and it will surpass this mark. So I do think that long term, I am pretty bullish on Meta. And just even going to their max chart history, going back to 2012, they have appreciated pretty much every single year since then. Only this real downtrend year in 2021 to 2022. That was their real downtrend year, but they clearly bounced back very strong. And you know what, if this trend continues, we're going to see some pretty amazing dividends in FBY. So that is also something to look out for. So in my opinion, I do think Meta, and I do think FBY is going to do pretty well in the future. And so this is one definitely to kind of keep on your watch list and just be excited for that first dividend announcement. I'm going to assume something about 30 to 40%, something similar to Apple, because it is a tech company. It's in the same space, or similar space at least. And I think it will provide something pretty similar to Apple, and so that's something to watch out for if you're looking to invest in FBY, Meta, or seek those price action returns. So I hope you guys did enjoy this video. I hope you guys got a little overview of Meta, got some thoughts on that and what maybe someone else thinks about the stock and where it's going in the future, and also got a little bit of a sense to understand that business model and what they do a little bit. So if you guys did enjoy this video, please do remember to subscribe. We're up to 1,727 subscribers. Let's try and get that up and get that to 1.73 subscribers by the end of today. I think we will absolutely do it. So thank you to everyone who subscribed. And I will see you guys in the next video. I hope you guys do take care and have a blessed month.